right, everyone, here we are with ticker symbol RIDE, RIDE, Lordstown Motors Corp. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Lordstown Motors has been in a bearish run. It has actually been falling to newer lows, and currently it's sitting right at one of the support levels that is very important as this was running up. Now, if it breaks through it, which it slightly has, but it stays below it, the next point of reference would be down here at 1557. I want you guys to write that down and keep that in mind. This is a very important number right now, because if it breaks through that, it's well on its way to these lows down here, and we'll have to pay very close attention to it. It's not that far from it. So 1557 is the next point of reference if it gets that low. But let's go ahead and look at what's important for tomorrow. And that was more of our extended information for support levels if it breaks through this support. And we're going to do this very narrow. And then we're going to talk about the first resistance level after this one. If it breaks through this one, what is important for the bulls to continue this run. So 1557 is not to worry about right now. You can pay close attention to that number in the next coming days and weeks. But before getting there, the first support level that the bulls are going to try to not allow to get hit, and the bears are trying to pull down through, is 1650. 1650 is the support level that I would emphasize to all investors. Pay very close attention to how this stock is reacting, because that is the lowest point reached in this bearish run and all this volatility that we have seen here after this bullish run. So 1650 is super important. I want to emphasize to all investors, pay very close attention to how the stock is reacting and how quickly is it moving further away from the 50-day moving average. Now, the 50-day moving average is 1879. I'd write that number down. Super important. As long as we're below it, the bears are in control, and the moment we're above it, the bulls are in control. So you have to keep that in mind and pay close attention to that. Now, for the bulls to actually have a recovery and not head down towards 1650 and pull away from where they're currently at 1676, they need to break through the first resistance level where they got rejected on this slight recovery and leveling off before it continued to fall at 1734. The bulls need to break through 1734, turn that into a support, and pull away from it. Now, that does not signify that the bulls have gained control. They don't gain control until they break through 1879. And on top of that, until they pull away from it. So this is the resistance level that I want to talk about that's important for the bulls. And it's up here. It's the highest point before it continued to fall and get further away from the 50-day moving average. And that's 1946. So the bulls need to break through 1734. They need to break through 1879. And the most important is up here at 1946. Turn that into a support so they can pull further away from the 50-day moving average in an upward direction, getting deeper into bullish territory. But before getting to any of these numbers, the first step, the first catalyst, and the first beginning of momentum is 1734. Turn that into a support and start to work their way up closer to that goal and build that momentum. Again, this does not signify breaking through this resistance that the bulls have gained control. This allows us as investors to know where the momentum of the stock is going, and if there's a catalyst to go ahead and pull away from it, giving more leverage to the bulls to get closer to their goal to then break through 1879 and get back into bullish territory. Again, I want to emphasize to all investors, pay very close attention to the behavior of this stock. If it breaks through this support level of 1650, it's the lowest point reached in this bearish run. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.